Can you hear me?
So everybody should be muted at this point. And we will utilize the chat. If you have any questions, please put them up on the chat and we will mix those in the conversation. But if you would, please keep your microphones on mute to get rid of any background noise that tends to happen when dogs or children fly through the room, because I wouldn't have any idea that that would happen. So
it has happened before.
yeah, yeah.
I've threatened them with every inch of their life, but you know, they're not scared of me, so.
I think everyone's been admitted so far. Once again, I'll just introduce myself real quick and do a little protocol thing, and then we will get started with Dawn and the Chamber and Economic Development Representative. So as we are recording this session for reference. I'm the program coordinator in the Augusta office of the University of Georgia Small Business Development Center. If you would, please keep your mics on mute and keep your cameras on or off. That is up to you. If you have questions, please submit them through the chat, and we will be able to answer those as much as we can throughout this session, or at the end. We're going to try and limit this to about an hour. It may go over a little bit. We'll just see what kind of questions are coming up. So it is recording now, so take it away, Dawn.
Okay. So good morning, everybody. Really glad that you could join us today. Just want to start out by introducing a few people. Actually, Ashley Roberts at the Burke County Chamber reached out to us and wanted us to do something on the PPP forgiveness. And when she first asked, I said, "Oh my goodness, Ashley, nobody knows anything. I have no idea. We cannot do that." So we scheduled it out, really hoping that something would come through before we actually started talking about it. And, you know, luckily on Friday, we did get some information about loan forgiveness. So we're going to go through that. But anyway, we've got Ashley Roberts with the Burke County Chamber, and we've got Mandy Underwood with Jenkins County Chamber. And we have Amy Howard with Jefferson County. And we have Debbie Jones with McDuffie County. And then we also have Lindsay Gentry from the Gentry Mobley firm, or Mobley Gentry firm, excuse me, in Waynesboro. And we especially need her here today to keep me on track, to let me know when I'm saying something wrong. And so anyway, she's going to jump in intermittently, basically, just to give her perspective as a CPA, which, you know, we all know we need that. So anyway, I'm going to go ahead and share my screen because I have a presentation that I think would be helpful. I think that it helps you to follow along if you're not just seeing my face, if you can actually read as we're going through. So I'm going to go ahead and do that now. Oh, hang on. I thought I had it up and I didn't. Excuse me. Wait a minute. Okay, so again, we're going through PPP loan forgiveness today, basically what we know about it today. And quickly, I don't want to spend a whole lot of time on this because I know many of you know who we are. We have a lot of information to go through today, so I just want to hit this really quick just to say who we are. We are the Small Business Development Center. We are part of the University of Georgia. We are not the SBA. People get us confused with the SBA very frequently. That's not who we are. However, we work very closely with the SBA. We help them with a lot of their programs. We help people with loan packages, with projections, especially when there's an SBA guarantee involved. We do get part of our funding from the SBA. You know, roughly about half of our funding comes from, you know, Georgia state tax dollars and that sort of thing, and roughly the other half comes from the SBA. So just wanted to point that out. Our mission is—
Real quick, Dawn, are you sharing your screen?
Yeah.
It's not sharing.
It's not sharing? Okay, hang on just a minute.
Oh, I'm not seeing it.
I thought I was sharing the screen. Hold, please.
It asks for confirmation to share. I don't know.
Yeah, it says host disabled.
Hang on. Well, I'm
I got to get permission from Rebecca. Sorry about that.
Fix that. Okay. All right. There you go. Try that.
All right. Can you see now?
No.
Okay, hang on.
Nope. I'm doing this. Hang on.
All right, it says I'm the host now. I should be able to do it. Share. Okay, now it's letting me do it, I think.
No.
No?
Oh, are you on two screens or one?
I'm on one.
I'll put it up. I don't know why it's not sharing. I'm gonna go back and put it up on my screen so they can see it. Okay.
Okay, sure. Hold on, because I don't think I sent you the last one.
You should be able to share it. I don't know why it's not sharing.
I'm sorry, y'all. Hold on one second. Okay, Rebecca, you should have it now.
Okay.
I'm gonna try one more time to share.
Yeah. Okay, you can go ahead and talk while I get it up.
Okay.
Because this is just the overview you're talking about anyway.
Yeah. So basically what I wanted to say is just what our mission is. And what we do is we help Georgia's businesses grow. That's what we're here for. So we help in all aspects of that, whether it be helping with your sales, any kind of marketing, digital marketing, QuickBooks, human resources. We have an international trade group. We have a minorities group. We have 17 different offices across the state. So we actually service every single county in the state. Just to let you know, we do hire, we've got about 50 different consultants, and we hire from different areas of expertise, because obviously no one can know everything, right? So basically what we do is we try to hire people with different expertise so that we complement one another. So basically, if you come to me, my background is banking, commercial banking. Was that for about 20 years before I came to the SBDC. So I'm very good at helping you get finance. I'm very good at helping you with business plans and projections and that sort of thing. However, I'm probably not the greatest at some of the other areas. So what I'll do is I'll reach out to someone else, whether it be a marketing specialist, that sort of thing, and they will come in, and we basically tag team you just to make sure that we can get you done. We have.
Okay. I'm sorry, Dawn, make me the host again.
Okay.
Sorry for the technical difficulties.
All right, hang on.
Find it.
Hang on. How about that?
Now your screen is sharing. That's good.
Good. Okay. All right. Hang on. All right. Can everyone see that right there?
But your slides aren't up, but you can see it.
Okay. Hang on.
Dawn, it looks like you're doing an entire desktop share instead of just a file share.
Okay. I tried to get you back as the host too. Go to, is that any better?
I'm not seeing
Got
it.
the Zoom up.
I did pull the Zoom up. Hang on a minute.
No, you need to pull the presentation up. And those of you that just joined, go ahead and mute your mics. Although it's very soothing music.
How about now?
There. Make me host instead of co-host, and I'll put it up.
Okay, I know. I just had some other things I wanted to share, so, but that's okay. I did make you co-host. That doesn't work?
No, you gotta put me a host.
Dawn, do you have two monitors?
No, I don't. I just got the one up. That's why I didn't understand it.
Okay, we're gonna get this bad boy going. Keep talking.
Well, I'm trying to get back to make you the host.
Okay, I have shared it. Is it sharing?
Yep.
All right, we're good.
Okay. All right. I think we're really done with that second slide anyway.
Okay.
Okay.
Okay, we're on the recap. Can you see it?
Okay, perfect. Yes. All right. Can everybody see that? Okay. So basically what I wanted to do is I wanted to kind of start off with really just a recap of what kind of everybody really already knew about the PPP program anyway. You know, this is something that we kind of all went in. We all went in basically just knowing that it was a payment protection program, that the whole goal of it was to keep your workers on your payroll for you, for them to stay off unemployment. So that was really the whole goal of the program. I think everyone knew right off the bat that 75% of whatever their loan was, you know, must be spent on payroll. That 25% of it could have been spent on other things as rent, utilities, and mortgage interest. We're going to get some more into that as, you know, the new rule that came out defines a lot of that. I think everyone knew that we had 8 weeks to spend the money. So once you got your money, you had 8 weeks to spend that. Anybody that was compensated over $100,000 a year, whether it be yourself, you know, as a business owner, or any of your employees, you know, that you didn't get to count anything over $100,000 a year for forgiveness. I think we knew that forgiveness would be reduced by layoffs or any kind of payment reductions of 25%. And of course, the SBA said that, hey, PPP money was not going to be treated as taxable income. I think that's going into the program. I think that's pretty much all. And I did want to I wanted Lindsay to kind of jump in here about the PPP money not being treated as taxable income, because, you know, there are some caveats to that as far as, you know, what you can use for deductions, and I think some legislation that may be changing as well. So I'm just going to let Lindsay kind of just discuss that last point there quickly.
Yeah, absolutely. So, of course, when the PPP bill was passed, the CARES Act stated that it would not be included in taxable income. But then the IRS issued a notice, and the notice number is 2020-32. And basically in the notice, it said that the expenses that were used with PPP funds would not be deductible. Now, that's where we stand right now, but I believe there's 3 bills out there. Some are from the House, some are from the Senate, Republican and Democrat sponsors, saying that was not the intent of the CARES Act. And so they're talking about, you know, additional legislation to change that. So we'll see what happens with that.
So thank you, Lindsay. I just wanted to, you know, everyone to kind of be aware, you know, that that's still kind of pending. So, all right, Rebecca, you want to go to the next one? Thank you. So why doesn't anyone have all the answers? This is something that I definitely wanted to touch on, because whenever I talk with clients of mine, non-clients of mine, that sort of thing, there's just a general frustration out there in the public. There's a general frustration with the banks, with CPAs. Everyone is frustrated. So it's not, I don't want anyone to feel like they're alone, but there's a reason why no one has any of the answers. You know, the CPA continually updates the rulings as they are interpreted. And so basically, I was going to show you, but I can't share my stinking screen. But anyway, what I wanted to say is it really started, I mean, back really after the I guess the night before that you could apply for PPP is when we got our very first interim final rule, of course, which we thought that name was a little funny because interim final certainly is an oxymoron, but basically what that meant was, you know, there was going to be more to come. We haven't gotten anything that says final rule yet. Everything is always interim final rule, and we have gotten 15 of those. So basically, it's frustrating for the SBA. The SBA is just as frustrated as we are. And when you think about the U.S. Treasury, you know, when they wanted to, they passed legislation, they put this money out into the street. The only way that they could do that, the only thing that they had was the SBA to facilitate that. And frankly, you know, the SBA wasn't ready for that. They didn't have the manpower for that. I mean, this is certainly unprecedented. There is just no other time in the history of the earth that I can think of that every single business was going to out and applying for PPP and they were also in charge of the EIDL program, the Economic Injury Disaster Loan Program. So when you think about everything that they were in charge of, I mean, they've actually probably done a pretty good job when you think of everything that they had to do. There's no way on earth that they could think of every single scenario. You know, what they were told was, you know, get this out on the street and get it out there as quickly as possible. And, you know, I think we can all agree that if anyone was tasked with that job, you wouldn't get it right on the first try or the second try or the third. So I guess what I'm saying is be patient. Everyone's frustrated. No one has the answers, and we're all working through this together. You know, and I think that we all have the same goals, but just keep that in mind that you're not alone. You know, if your banker doesn't know, they truly don't know. You know, maybe those rules haven't been written yet. And I also want you to keep in mind that, you know, anything that you hear today, I mean, that could change as well. You know, it could be updated. So, you know, if you hear something from someone and you're frustrated, you think that you've been, you know, misinformed, that may very well not be the case. It may very well be that was the case on that day at that time. So we've all kind of jokingly said, well, today on May the 28th at 10 a.m., the information is blank. And the reason that people say that is because it may very well be different tomorrow. It could be different this afternoon. So I just want to let you know, you know, that we're all in that boat. We're all struggling for the answers, and, you know, hopefully we'll get there soon, but it is a work in process. So just to let you know that. The other thing I want to caution you on is, you know, people constantly call me and say, well, my buddy said, or my friend said, if this didn't come from an SBA update, from an interim final rule, the truth of the matter is that they don't know. You know, you have got to be very careful where you get your information from, and make sure that it's a reliable source. And frankly, the only reliable source is, you know, someone that has the SBA ruling in their hand. That's something that we can certainly send out to you. You know, as far as what they are talking about for PPP forgiveness. So, you know, just be careful about where you're getting your information from. You know, if you're not sure, check with us, check with your CPA, that sort of thing. So just be very careful about the information that you get off the street, because people make a lot of inferences that, you know, frankly, they've read into the rule, and we've all assumed things, and they turned out to not be the case. And we'll go through some of those next. So anyway, but what do we know about forgiveness now? So on May the 16th, the SBA did send out the PPP forgiveness application. Basically that was, it's 11 pages long. So, you know, I don't want anyone to think that that's going to be a completely easy process. We're going to talk about it. I'm not saying that it's not, but for some of you, it will be a little bit more difficult than others. So, you know, what you have now, if you have PPP money, obviously you do. If you're listening to this, probably, you know, what you have is a loan, and you have to apply for forgiveness. So I just want to make sure that everyone understands that, you know, you actually signed a loan document when you got your PPP money. They didn't give it to you and say, hey, you don't have to pay this back. So there's a lot of responsibility on you as a borrower, to keep track of these funds and, to only use them according to what you're supposed to use them for. So on May the 22nd, that was Friday, that was the Friday before Memorial Day. And that evening, the SBA released the interim final rule number 15. So basically that dealt with a lot of loan forgiveness. It updated a lot of the questions that we had and frankly posed some new questions. So we're going to go through basically what that final or that interim final rule said. Note that, it was the Friday before Memorial Day. I would venture to say that a lot of people haven't truly digested that in its entirety yet. People were tired of being at their house, and a lot of people went out for Memorial Day, that sort of thing. So we've really only had a couple of days to digest that. So disclaimer there, I think we've got it all, but just know that this is very new. So that, this is only a few days old. So one of the things that I want everyone to understand about the PPP forgiveness is, it's not all or nothing. So, if you don't have your payroll costs exactly right, it's not that you have to repay the entire loan. We now have some formulas for some reductions. So I just wanted to let you know that people have thought in the past that it was all or nothing. You either have it right or you don't. And if I don't have everything exactly right, then I'm going to have to repay all of my PPP in 2 years. And that's not true. I also want to point it out that it's not the end of the world if your entire loan is not forgiven. And the reason that I say that is because, number one, if you don't use all of your PPP money, that's okay. You can turn that back in to the bank and not be penalized for it. If you don't want to turn that back into the bank, whatever portion is not forgiven, you don't have to. You can simply keep that as a loan. And of course, that's at 1% interest for the next 24 months. So we'll talk some more about that. But just know, it isn't, I've seen a lot of stress out there about getting your PPP loan, 100% forgiven. And I think that there's plenty of ways to do that. But want to let you know that if that isn't working for you, the government's not coming to chop your fingers off, as my husband always tells me. So, I always try to tell people that, kind of put things in perspective. We do live in the United States of America. They're not going to come with a black helicopter in the middle of the night and take you away and never bring you back. So it's not that bad. So, but anyway, so where are you in the PPP process? That's something that I want you to think about as we go through it today. So if your payroll is exactly the same as it was, pre-COVID-19, things are probably very easy for you. However, a lot of people, that wasn't the case. What we found out, I think that in the beginning, nobody really knew how long this was going to last. They knew that they wanted to get through to the flattening of the curve. I don't think anybody knew that it was going to last this long, so basically, when people started getting their PPP money, a lot of businesses weren't even allowed to be open. So a lot of those employees were on unemployment. Some of those employees didn't want to come back. Some of those employees had underlying conditions. Some of those employees had to take care of others with underlying conditions, or they didn't have daycare. They didn't have, their kids were home from school. Whatever the reason, a lot of employers had difficulty bringing employees back. So that caused a lot of anxiety and a lot of confusion with, oh my gracious, my PPP loan is not going to be forgiven. So that's where a lot of that anxiety comes from, is not knowing. I also want you to pay attention to where you are in the process as far as when you received your money. At this point, we're approaching people that have been 6 and 7 weeks into the program. Next week may be 8 weeks for you. I definitely want you to pay attention, because as it states right now, you have got to have this stuff paid out within the 8 weeks. So there's been a lot of chatter about that not being the case, about them coming out and saying, you know what, you don't have 8 weeks, you've got 12 or 16 or even 24, I've heard. So a lot of chatter about that. But frankly, do we think that they're going to get some sort of legislation or anything passed within the next week or within the next 2 weeks before you hit your 8-week period? Probably not. So I think you need to go ahead and make sure, that you're ready if they do keep it at 8 weeks. So, no matter what you've heard on the street, I've heard it on the street, everyone's heard that they want to extend that period, but as of right now, they have not. So I just want to make sure that everyone is completely aware of that. We have many people that have just recently received their PPP within the last couple of weeks. For those of you, this is going to be especially helpful because it will help you with tracking and forecasting and doing exactly what you need to do. So the other thing I want you to think about while we're going through this is who approved your PPP loan. If you got your PPP loan approved through a small community bank, chances are it's going to be very easy for your loan forgiveness application to go through. I think that they'll help you with it. I think that you'll have a lot of one-on-one attention, that sort of thing. However, we do have people that were funded by big banks, whether it be Bank of America or SunTrust or some of the fintech companies where you never actually saw a soul. You don't have anyone to talk to. Maybe it was through cabbage loans, that sort of thing. The process may be a little bit more difficult for you. So I definitely wanted to point that out. There's certainly help out there. The SBDC is here to help you. Your CPA is here to help you. If your CPA won't help you, Lindsay Gentry says she would love to help you. So just keep that in mind. You're not alone in this process. There is help out there for you. So, and again, I'm saying this just again, you can turn in the unused portion of the loan with no penalty, or you can keep it as a 1% interest. So if you haven't used it all, it's really not a problem. Just turn it back in. Okay. All right. All right. So some of the updates in the loan forgiveness interim final rule that I wanted to talk about was, it goes in there and it defines the payroll cost. It defines the interest and rent payments, utilities. It talks about the whole loan forgiveness process. It talks about the formulas for reductions. That's something that we certainly didn't have before. It talks about FTE calculations. We'll go into that in more detail. That was something that, I can remember when PPP first came out, I was thinking, oh gracious, well, hey, it just says you got to keep your payroll dollars the same. It doesn't say anything about how many people you have. That is not the case anymore. So we need to discuss that. And one of the big things that came out in the final rule or the interim final rule was that the whatever cost, whatever expenses you had could be paid or incurred during that 8-week period. And that was something that we didn't know before. We didn't know if you had to pick, a cash method or an accrual method, if you could do both. We had no idea, but now they're saying, hey, it's either paid or incurred, and incurred meaning that that cost, or excuse me, that expense was developed or accrued during that 8-week period. So we'll talk about that further in detail, but just to kind of let you know, just that's pretty much the main things that the interim final rule discuss.
Hey, Dawn, we have a question and I'm not sure we have an answer. Is there a timeline or deadline for applying for the loan forgiveness?
Yeah, so I'm a little bit fuzzy on that myself, and Lindsay, you jump in here if you need to. I definitely know that once you, that at the end of the time period, once you do your application and you send your application into the bank actually has 60 days to approve that. I've heard on the street over and over and over, I've heard it from CPAs, I've heard it from other people that the borrower as well has 60 days after the 6-week period to get that to the bank. But I'm a little bit fuzzy on that because I don't remember reading exactly that it said the borrower had 60 days. I definitely know the lender has 60 days. And then of course, the SBA has 90 days. Lindsay, do you know?
Well, I mean, I've heard from bankers, a couple of bankers that said that initially they were hearing 75 days from the start of the loan disbursement, which would only be 19 days after the 8 weeks is over. That now makes no sense because in the application for forgiveness, they're asking for some of the non-payroll costs to be provided up to a month after the 56-day period ends. Mm-hmm. So I think it's still up in the air.
Gotcha. Okay. Thank you, Lindsay. So, but anyway, let's go on to the next slide, Rebecca. So basically what I'm doing now is I just kind of want to go through, and the reason it's laid out this way is that it's laid out this way actually in the interim final rule. It starts off with well, the first 5 pages I don't read because frankly, it's just discussing like, this is what's happened. So, but when you get to page 5 or so, it starts getting into the meat of it. And basically there's a section in general. This is the in general section. This is what we pulled from there. It does discuss what payroll costs are. I don't think that there was any big surprise there. I don't even really know if I need to read it, but basically it just says, that payroll costs consist of compensation to employees. Their principal place of residence does have to be in the United States, which we knew that already. But basically compensation to employees in the form of salary, wages, commissions, or similar compensation. It talks about, the payroll costs or payment for vacation, parental, family, medical, or sick leave, that sort of thing. Payment for the provision of employee benefits consisting of group health care coverage, including insurance premiums and retirement, payment of state and local taxes assessed on compensation of employees, and for an independent contractor or sole proprietor, wages, commissions, income, or net earnings from self-employment. So it does discuss what payroll costs are. Lindsay, jump in anytime if I'm saying anything wrong that you, definitely not a CPA. She's our CPA here today. But one of the things that I wanted to point out that was that it talked about interest. And, before it just said mortgage interest. Well, now it's talking about mortgage interest, that it can be a business mortgage or that it can be real or personal property, as long as that was incurred before 2/15/20. So that was information that we didn't have before. Rent, it talks about rent payments, a business rent, golly, a lot of people, again, here's where people made inferences at. I know that SBA was asked, and frankly, they didn't know when we asked SBA, hey, what does rent mean? Does it have to be on a building? Does it have to be on a facility? And basically at that point they said, rent is rent. We have no guidance on that. Basically do it how you interpret that. People felt uncomfortable with that, but now here we have it that rent can be real or personal property. So I will ask Lindsay here. So Lindsay, don't you think that means that it could be rent on equipment or rent? I mean, that's personal property. Is that how you interpret that?
Yeah, if it says personal property, I mean, it can be a copier lease. It could be your postage machine lease. It could be equipment that you lease, for construction companies or anything like that, as far as I'm concerned.
Yeah, that's what I was thinking too. And, before they certainly didn't, they didn't spell that out. So that was a lot of questions. Also for utilities, and this is pretty interesting. They didn't spell out utilities. And, of course, we all guessed what utilities would include: gas, water, telephone, internet, all of those things and services, began before 2/15/20. I think that was no surprise for them to spell that out. Transportation, I have zero clue what that means. So I want to go ahead and let you know now. I have no idea. Lindsay, do you have any clue what transportation under utilities means?
I've had a lot of questions in that area as well, because I have some clients that are heavy, in automobile expenses. They have fleets of trucks and things of that nature. And frankly, I'm waiting on more guidance to give them, any assistance in that area.
Right. So when I tell everybody that, hey, the interim final rule for PPP loan forgiveness answered a lot of questions, well, it also raised some questions, and now you can see why. And that's pretty much exactly how it's happened. The entire process is that, we get clarification and then more questions come up. So, okay. New slide. Thank you. All right. So it also goes in and talks about the loan forgiveness process. And so basically I need to change that in there where it's talking about the borrower 60 days. The lender definitely has 60 days to look at your application and to approve that. That is spelled out in black and white in the interim final rule. It also talks about that the SBA has 90 days basically to get that money back to the lender. What I wanted, and Lindsay, I'm going to ask you here too. So it was interesting because one of the biggest questions I think that a lot of people had was, hey, can I have my idle advance money as well as my PPP forgiveness money? Is that going to be a deduction in PPP forgiveness? It's been very confusing. And in the final rule, it basically says that the SBA, it's not saying the bank, it's saying that the SBA may very well deduct the idle advance amount from the forgiveness portion if it's applicable. We don't know what applicable means. What do you think, Lindsay?
I have no idea what they interpret as applicable. On the application, I think everyone kind of knew that something was coming with it, because on the application for the PPP, it asked about, any advanced funds from idle as well.
Yes. Mm-hmm. Mm-hmm. So it's who knows? I think we have to get more interpretation from that. Now, this is a question the SBA has been asked over and over and over and over and over again since the very beginning of time. Well, I should say since the beginning of the PPP program. So basically what I'm thinking here is that they haven't decided yet. I think that they just want that right. So I've pretty much been telling all of my clients and everyone that I'm talking to, hey, take that idle advance money, go ahead and put that on a shelf. Don't use that, until we can find out exactly if that's going to be taken away from the forgiveness. Of course, I even told my parents that. My dad said, sorry, honey, I've already bought inventory with it. And I said, well, that's no problem, because when you sell that inventory, I want you to put that on the shelf, and I want you to keep that basically until we know. So we were really hoping to have an answer to that, but we don't. So anyway, so a portion not forgiven, just know again that it says that the loan must be repaid before the maturity date of the loan in 2 years. So if you have a portion that's not forgiven of your PPP, I was very surprised, just because basically it didn't give any indication on how you were supposed to pay that money back. Was it supposed to be a monthly payment? Can you wait until the day before the loan's due? It didn't give anything like that. It just basically said that it had to be repaid before the maturity date of the loan. So again, we were talking about there's probably no huge rush to fill out the application for forgiveness, although we don't know yet. But the reason that I say that is because, sorry, I thought I had that down. Anyway.
Dawn, can I add something real quick?
Sure.
We were talking yesterday in the conversation about the EIDL and returning the EIDL. So if that's on off and you decide that it's not going to be used, you can just return that, but it has to be returned to the Treasury, and we have the contact information for that.
That's right. And I'm glad you brought that up, because I actually do have a few people who have asked, hey, how do I return this and where do I return this to? We actually do have a place that you can return it now. Obviously you have to keep that documentation. Certainly not something that you don't want to document and keep forever. But at any rate, yes, you can most certainly do that. Anyway, the reason that I talk about, no huge rush, about the forgiveness application is simply because, we talk about June 30th, a good deal. And we'll go into that. There's going to be a lot of people whose 8 weeks ends before June 30th. So we'll talk about that June 30th date later. And again, you want to see if that 8 weeks changes. If that 8 weeks changes in a couple of weeks, you may really be able to go back. Obviously, if they're giving you 12 weeks or 16 weeks or 24 weeks to spend your money, then you can go back and make some alterations and get more forgiven. So. Okay, so payroll costs that are eligible for loan forgiveness. Again, we want to talk about that's either paid or incurred. And this was a big question, especially for you CPAs, I know. If you had a payroll period that basically was an expense for the week before, and then your normal payroll, wasn't until a few days after the 8 week period, could that be counted? And, now they're saying absolutely it can. One of the other things that they talked about was at the 8 weeks, when does it start? So basically you're going to have the option of saying when it starts now. So it can either be on the day of disbursement, not the day that it was approved, but the day that you actually got it into your account, the day of disbursement, your 8 weeks can start then, or you can choose the alternative payroll covered period. And basically that means that your 8 weeks would start on the very first day of the first payroll cycle in the covered period. I know that that makes it cleaner and easier for a lot of people out there. I think a lot of people will probably choose that. Lindsay can certainly weigh in. I know that that's something that she has to deal with all the time. What do you think, Lindsay?
The only thing I have to add is that they're saying that it can only be used for people who are biweekly or more frequent than that.
Okay. So
Yeah, that's right. And it
that's
has
a
to be, it has to be paid by the next payroll period starting. So.
right.
Yep.
Right. So the way you interpret that, Lindsay, is that if you're being paid monthly, then that doesn't apply to you. Is that right?
Correct.
So hopefully maybe that was an accident or an oversight. I don't know. Maybe they'll come back. That doesn't seem rightly fair. But maybe they'll come back and update that. But as of right now, we have to go off of exactly what they're saying. So, okay, next one. All right, so this I thought was extremely important because this was something that people asked over and over and over again. When you have employees that haven't come back, you didn't have a full staff, maybe you didn't have as much work for them, so you only brought in maybe you brought people back in part-time, maybe you reduced their hours, whatever it was. The concern was, hey, I'm not going to be able to get rid of my PPP money in this 8 weeks. Can I give my people bonuses? And no one knew. Can I accelerate their payment? Can I do prepayments? Can I do post payments? So basically this answered a lot of those questions. If you have furloughed people on your payroll, you can pay those people. That will be counted in loan forgiveness. So basically, if they're sitting at home not doing anything and you're paying them for not doing that, that's okay to do. Bonuses are for employees only. You can pay your employees bonuses. I know that there was a lot of talk about, oh, you can't do it if they didn't have a bonus the year before, or only if that's normal for you to do that. That's not what it says here. It says, that you can basically pay your bonuses, or that you can pay your employees bonuses. It also says that you can pay your employees hazard pay. There really is no guidance as to how much you can pay them. So I don't know how you look at that, Lindsay, but I've certainly looked at that as a loophole to, if you're at the end of your line there, June 30th, and you haven't used it all, you could probably go back and pay your employees bonuses and hazard pay to make up for that. Is that how you see that, Lindsay?
Yeah, and this was a total 360 to what all the chatter was before this ruling came out.
Oh, absolutely. Yes. Yeah. So, I don't know. I thought that was a nice little gray area. And now that we have a ruling on it, I think that that's going to be extremely helpful for you to get rid of your PPP money. Note that, it still can't exceed $15,385 to anybody. I think that includes the bonuses, right? Or not? I guess not. What do you think, Lindsay?
Well, I agree with that.
So, because it says over and over and over, you cannot exceed the $15,385. And where that comes from is that's the $100,000 that's annualized. So they're just taking $100,000, they're dividing that by 52 and they're multiplying it by 8. And that's where they're coming up with that $15,385 from. So nobody can make more than $100,000 from one employer from the PPP. So the payroll cost is onerous. So the good news was that, you can pay the employees bonuses. The good news was that you can pay the employees hazard costs. But from the way that I interpret it, you cannot do that if you are an owner. You cannot pay yourself a bonus. You cannot pay yourself hazard pay. Basically, if you're paying yourself a W-2, maybe you're an S Corp and you're receiving a salary, you're capped by whatever compensation that you got in 2019. Of course, that would include, your employer retirement and healthcare contributions. But if you're a Schedule C, I know many of you sole proprietors, Schedule C, capped by your 2019 net profit. So if your net profit last year was $10,000, you're not going to be able to get any more. Like it's pretty specific in there about how that is read. This one I need a little bit of help with, Lindsay. This is, your general partners. That's going to be capped by 2019 net earnings. From what I could tell is that didn't include, any sort of retirement contributions or any health care contributions. Is that how you interpreted that as well?
This is kind of, we keep on using the term hot mess, and I think this is one of the questions. I have a hard time figuring out how they're going to determine this without getting information from the partners themselves. Sometimes
Absolutely, yes.
you might have a partnership that has 20 partners involved in it, and I don't know how they're going to do that, because the net earnings, the self-employment income, that would be on that partner's Schedule K1, but the unreimbursed partnership expenses and that sort of thing, that's on the partner's individual income tax return. It's not on the business return. So I'm not sure how they're gonna do that, to be honest with you. I think there's going to be some cleaning. I think there's going to be some cleaning on this issue.
Oh, absolutely. So again, it clears up some questions and it raises others. That's why Lindsay used the term hot mess. Maybe that's what I should have titled the whole entire slide was a hot mess. But anyway, okay, Rebecca, go next. All right. So what are the things that would reduce forgiveness? So obviously not spending at least 75% on payroll. That's a big one. Not keeping the same amount of FTEs. That is what we're going to go into that in a little bit to discuss exactly what that means and how it's calculated. There are exceptions. Not paying an employee less than the 25% of their normal salary. And of course the solution, now this interim final rule is given a solution, is that basically if you restore these FTEs, which are your full-time equivalents, full-time employees, the reason it's called equivalents is we'll talk about that soon. But at any rate, if you restore those FTEs and you restore those salaries by June 30th, you can restore them by June the 29th. But if you restore them by June the 30th, that will not dock you. So do want to keep in mind though that doesn't exempt you from spending your money. But we'll go into that in a little bit more detail in a bit. Okay, so exceptions to the full-time equivalents. Maybe you had an employee that declined the offer to come back to work, after being offered the same amount of hours and the same wage. So note that you must have offered that person something in writing. You sent them an email, whatever it was. You had to say, hey, maybe they were working and they were, maybe they were working full-time and then they came back to work part-time because you didn't have enough work for them. Whatever it is, you have got to offer them in writing, to restore to their same wages and their same hours. You've got to definitely keep documentation of that. And you also, this is a big one, you've got to inform the unemployment office. So whenever you're going in weekly or monthly, however often that you do that, to claim unemployment for your employees, you have to make sure that you update this, that they decline that offer. If you have this written and you have this documentation, this will actually exclude this employee from the full-time equivalent headcount. So basically, if this person was a 1 before, in other words, if this was a whole full-time person before, you can just throw them out. Okay, so just wanted to make sure that everyone is aware of that. So if you have somebody that did not come back to work, that is not going to mess up your PPP forgiveness. Okay, all right. So next, some of the other exceptions that the interim final rule came out with was, if you fire an employee for cause, the key there is for cause. So, make sure that that's documented. You're going to have, I know I've heard of plenty of people who said, I have people who just said, peace out. Like, I'm done. I'm going home to be with my family. I'm not coming back. They just voluntarily resigned, that sort of thing. Or maybe they said, I've got my kids at home. I don't have daycare. I don't have this, that, or the other. I can only work a few days a week, or I can work reduced hours, that sort of thing. Just wanted to let you know that that's not going to mess you up in your calculations either. These employees will keep the same count in the cover period as they did on the reference period. So because that's not through any fault of the borrowers whatsoever. So just wanted to make sure that you know that you won't be penalized for that. However, be sure to keep documentation. Okay. All right. So what are these FTEs, these full-time equivalents? Basically, this was a bit of a surprise. I think that everybody thought that the full-time equivalent was going to be 30 hours a week. However, when this interim final rule came out, it said 40 hours a week. So basically, full-time equivalent is a 40-hour-a-week person. So one of the things that you can do, excuse me, you've got to calculate your FTEs for the reference period and then again for the covered period, but you get to select your reference period. So you can select your reference period, you know, how many people were on your payroll January 15th of 2019 through June 30th of 2019, or you can choose January 1st, 2020 through February 29th of 2020. So you get to choose one of those two dates, but you got to stick with it, you know, throughout. So also, I know that there are some seasonal businesses out there. I don't know if this is helpful. If it were me, I would calculate it all the 3 different ways to see what best suits my needs. But basically, you can choose any 12-week period between May the 1st, and I can't see the slide, but I think it's September the 15th. If I'm wrong, somebody shout, but I think it's September the 15th. See if that helps you. But you do have to calculate it for the reference period, and then you're going to have to go and calculate it again for the covered period. So during that 8-week period. So let's talk about how you do calculate these full-time equivalents. So sure, go ahead.
Sorry, just a quick question. Is there any chance that the calculation might use something other than 40 hours? And one of the many training classes I've gone to and documents I've read, I picked up 30 hours was suggested, but I can't remember where that came from. Do you think there's any possibility it could be something other than 40 hours?
I don't think so. We'll talk about this and how they're compensating for that. And the reason that I say that is, you know, we'll send you a copy of this interim final rule, but basically it even discusses, hey, guess what, guys? I mean, they literally spell out, we thought it was going to be 30 hours too, but we've decided against that. So
okay, thank you.
They actually like literally spell out, I know Rick's got his open. I don't know if you want to go to that.
Yeah, Judith, in the interim final rule, the latest one that came out last Friday, it discusses where the SBA and the Treasury Department discussed 30 hours as an option, which 30 hours was in the previous interim final rules, but they said they settled on 40 hours as a full-time person. So the 40-hour, the reason you've heard 30 is because that number was out there in previous interim final rules, but this one basically said, while we discussed 30, we settled on 40. So 40 is the number for a full-time person.
All right, very good, thank you. And I'm relieved to know I didn't dream that 30 hours.
Oh no, that's why Lindsay calls it a hot mess. But anyway, there are 2 different ways, to calculate these full-time equivalents. If it were me, I would probably calculate mine both ways just to see what best benefits me. You can either choose the precise method or you can choose the simple method. That being said, if you're going to choose, one method over the other, which you do have to choose one method over the other, you have to use that for the reference period and for the cover period. You can't go swapping back and forth. It's got to be one way or the other. So the precise method basically just says, hey, 40 hours a week equals 1. That's one-time full-time equivalent, right? If you're over 40 hours a week, if you're 50 hours a week, 60 hours a week, 48 hours a week, it doesn't matter. That is still 1, okay? But if you're 30 hours a week, then basically you're just going to take that 30 and divide it by 40, and you're going to get 0.75. So that's 0.75 FTEs. If it's 25 hours, they're rounding it to the nearest tenth, so that's 0.60. And basically, if it's 10 hours, it's 0.25. So from what I understand, you can have 5 employees, and that's still going to count as a quarter of an FTE. So Lindsay or Rick, if you think I got that wrong, holler, but I think that's right You know, you got somebody working 5 hours a week, it's still a quarter. The other method is just a simple method that just says, hey, you know, if you're 40 hours a week, you're one, you count as one full-time equivalent. However, if you're part-time, you know, whether you're 39 hours or 5 hours or 10 hours or whatever, you can count that person as a half. So I think what's important to note here is these FTEs don't have to be the same people. So you'll note on the application at the very end, when you start on that worksheet, it asks you actually for employee name. It asks you for the last four of their social, I believe. So it asks for a lot of information per employee. However, those employees can go, it doesn't have to be the same person. So, you know, if you've got, like, let's just say that you have a full-time employee in the reference period and in the covered period, you didn't have that full-time employee anymore, but you made up for that whole FTE by hiring 2 part-time people. You know, so basically you could have one 40-hour-a-week person in the reference period. That person, you could have two people that work 5 hours a week in the cover period and count that as 2 halves to make one whole, and that benefits you, you know, frankly. But anyway, just make sure that Lindsay or Rick, if you think I didn't get that right, to holler, but I think it's spelled out very well in the interim final rule. I mean, so that pretty much anyone could understand it. I just want you to know that you can mix and match that as far as, you know, making up that FTE. You know, you can add the 60 if you're doing the precise method. You know, if you had a 25-hour person, you know, you can add a 10-hour person, that sort of thing. But again, do it both ways and see which way you come out better. So, okay. All right. How will the reduction be calculated? So obviously the goal is to have the same amount of FTEs in the cover period as you do in the reference period. If that doesn't happen, again, you know, we've talked about that you've got until June 30th to make that happen. The total eligible expenses available for forgiveness is reduced proportionally by the percentage and reduction in employees. So basically what that means is if you had 10 full-time equivalents in the reference period, and in the covered period, at the end of the covered period, you only had 8 full-time equivalents, then basically that means that your entire loan forgiveness, including all expenses eligible, are going to be reduced by 20% reduction. So you can see how it's really extremely important that you get these FTEs right. You know, if you do not have the same amount, you're going to get docked pretty heavily. So what you need to do is to utilize that through June 30th and make sure to get those FTEs up. And of course, they've made it pretty easy. Like I said, you can hire 2 people for 5 hours a week and make that one full-time person equivalent. So hope I explained that okay. All right, so June 30th. We've talked about June 30th a good bit. You know, hey, if my FTEs weren't up to par, or if my wages dip below 25% per employee, I've got time to fix that. So let's just say that you had somebody who is normally working, you know, 40 hours a week, or let's just say they were making $1,000 a week and you didn't have a lot of work for them. So you brought them back, I don't know, at $500 a week. You know, that's a 50% reduction in pay. You have to understand that before June 30th, you've got to get them back up to that original $1,000. So you can even do that on June the 29th. I want to make sure that everybody understands that this does not change, and this is spelled out in the interim final rule. This does not change or affect the requirement of at least 75% of loan, 75% of loan forgiveness must be attributable to payroll costs, meaning that just because you've rectified that on June the 29th, you have had to have spent that money as well. Again, I want to go back and say, consider bonus or hazard pay for the other employees. You know, make those other employees happy, whatever it is that you have to do. You can't do it to yourself as an owner, but make your employees happy and go back and give them a bonus or hazard pay. Okay. All right. So here are some tips that I wanted to talk about. go ahead and even if you've got someone else doing your application, I really think that you need to familiarize yourself with the application just to kind of see where you're at. You know, you may have room to make some changes at this point. Go ahead and start on that and just see where you are, especially if you're coming near the end. If maybe you've just started out with your PPP, you can start forecasting. Definitely take that application. You know, our chambers were supposed to have sent that out to everybody. If you didn't get that, you know, we'll certainly send that to you. But start backwards in the application. Start with the worksheet to Schedule A. And then you go to the Schedule A, and then you actually come to the front page. But all those worksheets have to be done. That's where you're calculating these FTEs. That's where you're calculating to make sure that you didn't dip down below 25% salary. So just want to make sure that you see that. Again, no rush to submit the application for forgiveness. We think, not sure, but basically, you know, we want to see if that 8 weeks changes, because I think that that's going to be beneficial to a lot of people if they have more than 8 weeks to get everything right. There is some documentation requirements. Those are on page 10 of the application. You can read through those. I think it's pretty self-explanatory. Obviously, you know, they want your payroll records again. You know, if you paid an electricity bill, or you've paid, you know, whatever utilities, keep those receipts, that sort of thing, or invoices, clip that. And then also, obviously you've heard here that even though they've clarified some things, that we've actually raised questions on others. So definitely keep looking for updates and revisions, you know, new legislation, that sort of thing, because it's not over yet. It didn't say final rule. It said interim final rule number 15, which means another one is coming. So, okay. Some other resources. Obviously, there's many people who are like, you know what? I'm not dealing with that. I'm strained for time. I'm trying to run a business here. I ain't got time for all that. We can certainly help you work through your application. Your CPA can help you work through that application. If your CPA doesn't want to do it, you know, Lindsay may take you over at her firm. You can ask her. So basically, we also have some information on tracking PPP money in QuickBooks that we can send you. We have a Word document kind of spelling out exactly how to track those in QuickBooks. And then also there are sample forgiveness calculation spreadsheets. I was going to show you one here today, but I can't share my screen. But I do want to say, be very careful of these because many of these haven't been updated yet. For example, you know, everybody thought that these FTEs were going to be calculated over 30 hours and said they're 40. So many people's spreadsheets are wrong right now. So what I'm saying is anybody can make a spreadsheet. Also, anybody can mess up a spreadsheet. So make sure that you know what you're seeing, and again, get the help of someone else. But basically, you know, just start looking at this stuff, because you know the loan forgiveness isn't automatic. It is an application and is a process. All right, Lindsay, did you have anything else to add to any of that before we start with question and answers?
I don't think so.
Okay. All right, so I think now we've got some time for some questions. If anybody has any, I'm going to let Rebecca look through those.
I have one question that's come through. Cleared payroll checks be required as supporting documents?
I'm sorry, my internet was unstable right there. Something
okay. About the question says, might cleared payroll checks be required as supporting documentation?
I think it's possible. You know, what I saw with the application was that was one of the examples used, but the application sort of spells that out as far as documentation. It's towards the back of it. Have to get it directly in front of me. Give me a second. Here. Lots of papers here.
Do you want us to give you a minute? You want to go on to the next question and come back, Lindsay, to give you a few minutes to find it?
Sure.
Okay. All right, Rebecca, go ahead.
That's really the bulk of the questions that we've had through. If anyone wants to unmute and ask a question, feel free. Or actually, here's another one that's just come in. It says,
okay.
So the banks that gave the loans determined the forgiveness subject to SBA approval. Is that correct?
That's that's the way I understood it. Yes. So your bank is going to be the one that actually determines forgiveness. And then, you know, if they mess it up, then the SBA cannot pay them. So they're going to want to get it right is the whole point.
Well, and another thing that just came out this morning, and I don't want to open up a whole nother can of worms here, but the banks.
They're open, Rebecca, they're open.
I know, they're open. Let's just do it. The banks have till the end of the day today to verify anything that the SBA said was questionable on some of these loans. So if those are not proved or disproved by the end of the day today, SBA might not guarantee those. So who knows what the banks will do with that.
Mm.
Yeah, I hadn't read through that, so.
Okay, I've got the information on the other one.
Okay, sure.
It's on page 10 of the application packet, and it basically just says that documentation verifying eligible compensation from the covered period or the alternative covered period consisting of each of the following. And the first one is bank account statements or a third-party payroll service provider reports. The second one shows quarterly tax forms. So it could be your 941s, payroll tax returns, unemployment tax returns or whatever for the quarter or quarters that has the covered period in it. And the third one says payment receipts, canceled checks, or account statements documenting the amount of any employer contributions to employee health insurance and retirement plans. So it seems like the canceled checks and all that seems to be more tied to the payroll costs that are not specifically payroll, health insurance contributions and retirement plan contributions.
All right, so we have another question that's come in. If we had an employee that went on unemployment before receiving the PPP due to childcare and is still on unemployment, will it look like we are double dipping? I have conflicting answers from payroll companies and CPAs on this matter. I don't know. So
Is she paying her and she's on unemployment?
it says we had an employee that went on unemployment before receiving the PPP due to childcare.
Okay.
Still on unemployment. Will it look like we are double dipping? Yes. I mean,
Okay, so they said they're just on unemployment, so no. So you can't.
Here's
Go ahead,
the
Rick.
thing that you got to consider is, are they getting that additional $600 per week federal unemployment benefit in addition to the state unemployment benefit? And so if the business took PPP, they have to offer that person that job back. And if that person declines to come back, then they have to tell the Department of Labor, they offer the person a job, they decline to come back, the Department of Labor is immediately going to withdraw that person from receiving state and federal unemployment benefits, and then they will have to individually apply for those.
That's correct. That's what I've been reading too, Rick.
Yeah. I watched the webinar last night with the Department of Labor, and that's exactly
Good.
the scenario that they described. So the employer is obligated to do two things once they got PPP: offer the person the job back, and if the person declines, inform the Department of Labor the person declined, so they can be removed from unemployment benefits. Because the PPP was designed to keep people from having to go on unemployment.
Are there any other questions? It says, can you go over the reference dates once more, please?
Sure. I think that came from Billy. Billy, we can send that to you as well. I'm going off memory here. I believe the reference dates were either January, oh gracious, I went back. I may have to go back.
It's February 15, 2020 to March 31st, 2020.
Hold on.
The reference dates
I don't think that's right.
The reference dates run from January 1st, 20
January 1st.
to February 29th, 20.
That's right. Or
the year prior.
Right.
Or January 1st, 2019 through June 30th, 2019.
Yeah, we'll see it. It'll be interesting if they end up allowing, right now they're saying owner employees and all that has to be 2019. But, you always hear chatter, but if they'll end up letting them choose one of those reference periods too, because a lot of calculations are not working out for owner employees right now.
Yeah. The biggest thing is whatever you use for the reference period to calculate employees, that's what you have to use for the 8-week PPP period. You can't use one for one and one for the other.
That's correct.
I have a question, Lindsay, and the only reason that I want you to go into this is because I feel like we're going to have a lot of people in that category, a lot of sole proprietorships out there, that sort of thing, a lot of people with Schedule Cs. You do want to go into the confusion, basically that the new interim final rule caused with, you know, how you calculate in owner's salary, a single.
Yeah, what's going on? I mean, it's if you put simple numbers to it, it sort of makes sense. And I don't know how many people out there have a calculator in front of them, but let's say it can be a sole proprietor whose net profit for 2019 is $30,000, or it could be a S corp owner whose salary is $30,000. Either way, this is going to apply. But when let's say they were the only employee or the only person that, you know, the PPP application applied to. So when they applied, they would have said that their average monthly payroll was $2,500. 30,000 divided by 12 months. It's $2,500. And then the loan amount would have been 2.5 times that, which would be $6,250. Well, now on the application for forgiveness, it's making you calculate your limit on owner-employee payroll a different way. So if you take the same 30,000, they're saying you have to divide it by 52 and multiply it, you know, 52 weeks. That gives you $576.93 a week. And then you multiply it by the 8-week period, which will give you $46,15.44. So 2 months of payroll was $5,000 calculated monthly, but 8 weeks of payroll is calculated at $46,15.44. So, and that person would have not changed their payroll at all if they were $30,000 in 2019 and they're $30,000 in 2020. Just the change in the method is causing some problems.
And hopefully they'll clear that up. Surely
Yeah.
it's an oversight, wouldn't you think?
I would think so, but you never know.
Surely it's collateral damage. Isn't that the word for it?
Yeah.
Yeah, and that verbiage that Lindsay was just talking about, that where it says, you know, the individual's payroll compensation can be no more than the lesser of 8/52 of 2019 compensation. That was not in any of the previous interim final rules. That's additional information on this last one that just come out.
Any more questions? We have a couple minutes, or we can, those of you that have the questions answered that you need to, we appreciate you attending today. I will send out the slide presentation to those representatives from the counties, and if you email me at the email I put in the chat, I can get that out to you individually as well.
I am going to make that one correction though. I don't want to say on there about the borrowers having 60 days since we don't know.
Okay.
We'll
In this latest rule, it doesn't say anything about the borrower. It just talks about the bank having 60 days to process it, and then the SBA having 90 days to review it. So,
and it's crazy. Everything that I hear. Yeah. Sorry, Rick.
But it does reference October 31st of this year is when the program has to be everything has to be reconciled. So, you know, that does give the borrower some time after the payroll period ends to get all their stuff together and get it to the lender, but there's no specified number of days.
I missed that October 31st deadline, Rick. Thank you.
Yeah, it's in here, but that's a pretty generous deadline, really, because
I didn't see that.
I say it's a generous deadline. You know, if somebody just got their PPP and they don't end up using it before June, then you take 60 days and 90 days. That's 5 months. That's July, September. That would put you right up against it. You know, so yeah.
Anything else? You can always email us at the office or contact Dawn or your Chamber and Economic Development reps if we can be a further service to you. Dawn, was there any of the Amy or Ashley or Debbie or Mandy, anything you want to add to any of this? Debbie's good. Okay, we're all good then.
Just wanting to say thank y'all for doing this for us and everything that you've been doing over the past couple months to help us with all of this overwhelming information and trying to get as much out there to our members to help them. So I'm sure this probably won't be the last time we do this. So we'll touch base soon and see when we can do this again for more updates. So thank y'all again.
Yeah, we try to make everything as clear as mud, Ashley.
Yeah, you did good. And thank you to Lindsay, our very own
Absolutely.
CPA, for being with us this morning and providing her insight and information.
Yeah, we really appreciate your time, Lindsay. I know it's very valuable at this point.
Glad to do it.
Send the bill to Ashley.
All right.
Thank you all. Have a great day.
Thank you. Take care. Bye-bye.
Bye.